What's going on, Money Morning Live? It's always fun hanging out with Nick Black, and he was hanging out with Amin today, which is a nice treat for all of us. But right now, we're bringing in Tom Gentile, Power Profit Trades, event happening on Thursday. Lots to talk about. Let's bring this man in 5, 4, 3, 2.
Hey everybody, Tom here. Welcome to Power Profit Trades, Tuesday, April 19th, 2022. And this is our Operation Surge Strike edition of Power Profit Trades. So in the next hour, I've got screens all over the place here. I want to go through earnings season. I want to talk about not one winner. We got two winners to talk about coming into the week because we jumped on another one here early this morning. Also, I got some leaked photos out there that I need to talk about as well, too. Don't panic. It's all trade-related. Nothing that's exposing me. But I want to expose you to some new stuff that's happening. We're going to get into all the details on how you can be first in line for that. And, of course, everything else, charts, questions, comments, etc. Eric, you know what I forgot to do?
What'd you forget to do, Tom?
I forgot to put in the live room so I could see everybody chatting.
No, I'm here to help you with that too. If you need assistance, perfect. I'm here grabbing questions throughout the entire show. So don't be shy, everyone. If you have questions, let Tom know.
Awesome. Well, thank you, Eric, and thank you everybody for hanging out with me here over the next hour. Let's see what we can do here. Also, YouTube members, quick shout out to you as well. All right, so let's start off with, you know what? I'm going to start off with how we ended yesterday. All right. We ended yesterday talking about cryptocurrency. And so I want to start off where we finished, and that was with Bitcoin and Ethereum. So those darknet signals I showed you, looking pretty good today. Now, 2 days do not make a trend, but let's take a look at the chart and see where we are and where we may be possibly going. So all eyes on the Bitcoin chart you see here. And the only thing I'm missing is that big red, there it is, mouse that I use. Here you go. Last big buy signal we had on Bitcoin. This is a swing that swung us from just over 40,000 up to around 40. Well, it's just below 48. We dropped back down into 40, into 39, actually, 39.5. Got another signal. A little bit of back and forth, but today it looks like we're back on the upswing. In fact, let's check in with Coinbase. Let's see what's going on as I'm going to pop on over and let's look at BTC. So bringing up BTC, we'll get an idea what's happening with this chart, and you'll see the live. It looks like 41,450 and change. You can see here. This is a 1 hour interval, and you can see here all of the action started yesterday morning when we were talking. We were talking about that buy signal, and boy, did it take off. We're just coming off of new intraday highs, 41,750 up there. See how high we can go. The other one we looked at was Ethereum, and ETH, which I mentioned, was the stronger of the two. It's definitely the stronger of the two today, as it's up about 7% in the last 24 hours. But let's take a look at where it was when we were talking about it. So when we were talking about it yesterday, isn't that great? You could see that it was down here in that 2,900 range, 2920, 2940, and then whoosh, as it goes back up to the weekend highs. And it has accelerated past that to levels that are above 3,100 as we speak. So you can see a lot of that action has happened. Hey, this is what the darknet shows us. And I even had guys on my team that were looking at and trading in the Bitcoin and Ethereum based on those signals we had yesterday. So gave them out to you. Do what you will with those. As far as other signals, well, those of you that are part of Microcurrency Trader, we get into those in our members only session. So that's Bitcoin. That's Ethereum. Let's talk about some stocks. We got a volatility update that I want to share with you here. And so before I get into stocks and before I get into bonds and currencies and commodities, let's talk about some stocks that are having earnings right now in the market. So I'm going to move over my stock charts, and we're going to start off with Johnson & Johnson. So we had earnings from Johnson & Johnson that came out. today or before today. You can see here, J&J was caught. The last earnings season, we were trading here south of 170. Had a little rise up, and every chart I'm showing you today is going to have two things on it. Number one, it's going to have these dotted lines, which we use for what we call them stock chart peak support and stock chart peak resistance. The blue lines are support, the black lines are resistance. As you can see, we had a couple of blue lines that we came down and we touched the blue line support. And this was back in February, down here around 155, and ran off of that. The other thing that I'm showing you is I've got darknet signals on here. Buy, sell, all right, profit, buy, sell, profit, buy, sell, profit. Nothing out here, but we've extended that move after earnings and are now hitting resistance levels around the $185 mark for J&J, right? Let's add on. Let's see if I can add on anything else on here. No, we're just going to look at these two things. I don't want to clog up the charts that much today. So moving on to Travelers Companies, also reported earnings, and it looks like this stock is traveling south today. As you can see here, we had no darknet signals, but a lot of support down here around the 145, 155, 160 area. Resistance, which we pushed through 170, 175, and the top line resistance, 8, looks like we're not going to be hitting that anytime today as Travelers is moved to the south side, as you can see. All right, what else we have? We have LMT, all right, Lockheed Martin, earnings out. And you can see here, blue line support takes us, really the support that I'm looking at is right here in the middle, which is around the $390 share area. Resistance, this is now closed resistance. Closing meaning I'm not looking at the wicks of the candle. I'm looking at the close of the day. So close of the day, resistance around the $467 mark. As you can see, we're just a bit below that right now. No buy and sell signals based on any kind of channel technology that we use. Hasbro actually, we've seen some buys and sells in the past. Haven't seen anything this year as it's moved lower, but we did get some nice acceleration off of the most recent earnings that occurred, and Hasbro's having a pretty decent day, and it is now broken out. It looks like it's broken out now of about a 1 month, just 1 month sit, where it's had a sit in down here between 82 and 86, hitting 86.98 as we speak. All right, so Hasbro reports earnings. JB Hunt reported earnings. Here's JBHT. And as you can see, this one really has a lot of volatility in it in its past as it ran up with the potential supply chain issues, then ran down with its own issues as it went from over $215 a share down to 170 very, very quickly. It's now sitting. It's a sitting duck above 168. That's the support line. Currently trading at 172.71. We will see where they end up, but I'm telling you, the earnings report for JB Hunt did not move the needle for this company. All right, now we're going to get into our key asset classes. I want to talk about Halliburton a little bit later in the show. That's one that our Surge Strike users got a hold of, as well as Netflix. We're going to talk about Netflix because we do have an order to get out of our straddle, our Netflix straddle, up about 30% as we speak. We'll see. We'll check into that one as well. Now, key asset classes. So when I look at stocks, this is one of the areas I look at. This is the Dow Jones Industrial Average. As you can see here, it's really been channeling down. We got a little buy signal back there at the beginning of the year off that downtrend, and then a subsequent sell signal not that long afterwards. So a nice little move from about 340 to around 355, then back down. We haven't seen anything since. But what we have been starting to see, at least for the Dow, is a little bit of higher low and higher high. Is there channel consolidation starting to form with the Dow Jones Industrial Average? Could be. And I'll tell you why I think it could be. Because if you take a look at the SPY, you know what I see? I see a darknet buy that happened yesterday, right? And by the way, for full transparency, I recently put a long position on in SPY. If you want to know why, this is the reason right here. Okay. I've seen buying opportunities and selling opportunities, and they make themselves available. These signals, by the way, are about a 3 to 4 week time span. So this is telling me that based on what we've all seen in the past, that we could see on average, really the rest of the month of April could be a bullish hint. All right, going forward, as long as we don't have anything that just is crazy, we're going into earnings season. And I think earnings season is going to be a little bit on the bull side. The reason I believe that is because we've had such a downdraft this year that I think a lot of traders forgot about earnings. Okay. A lot of traders forgot about earnings, and earnings are starting to come out. So we know interest rates are going up. Yes, we know half a point's on the table. We know 3/4 of a point is not off the table for the next hike. But I think what a lot of people are forgetting is that there's some good earnings that are about to be announced, and that could help shift the market a little bit higher. Darknet sees that on the technicals for SPY. How about QQQ? I thought I'd put all three of them up here, and guess what? 2 out of 3 ain't bad. All right. As the is it Kenny Rogers who sings 2 out of 3 ain't bad? I don't remember off the cuff, but 2 out of 3 definitely ain't bad when you look at the Dow, the S&P, and the Nasdaq. As the Nasdaq too has gotten its latest darknet buy signal. There's a buy back there around the same time frame as the S&P, and that buy signal resulted in about a 10-point move when you see what's going on with the QQQs in a past signal. All right, turning forward and moving into bonds. Does anybody in the chat, I don't care if you're watching me on YouTube or Money Morning, anybody in here want to take a stab at the direction of TLT? Not even showing you the chart today. What do you think? Do you think we finally turned the corner and moving higher? Or, like a lot of you are saying right now in the chat, yep, you guessed it. Here we go. Let me move forward again. And TLT down to new lows. We are now down below 119. Par for the course is what we're looking at. Livestock says, I've been shorting TLT, and that's great. That is an absolutely great shorting opportunity. I do believe, though, that TLT is getting ahead of itself a little bit, and there's going to be some buyers that could come in. Let's call them short covering traders. Could eventually see that move, and I'm waiting for another opportunity. That last opportunity. I'm not long and I'm not short in TLT. Would love to have been short. Would have been the right way to take this market, but I'm looking for a reason to get a quick little position on TLT. We will see what ends up happening. All right, moving on. Cash. Here's one of the reasons why TLT is going down, because the US dollar is going higher. And so you take a look at US dollar. I mean, this thing's back up. The last time I saw 27, folks, last time I saw 27, March of 2020. I think is the last time I saw something that was this high. You have to go back that far to see what's going on with UUP. And now UUP is not a measurement of cash versus commodities or a measurement of cash versus stocks. UUP is a measurement of the US dollar when you compare it to other foreign currencies in a basket. That's what we're looking at with UUP. All right, let's take a look at crude oil. So crude oil is giving me, guess what, a bit of a breather, because I don't want to see too much too soon. I like 85 on the horizon. I would love that to happen in, say, a month or so. Just slowly kind of cruise up there into that $85 area for UUP. Would love that. Love that, okay? Someone's asking about USO. And let's take a look and see what, or not USO, but UNG. That one's kind of been all the rage. So if you really want to see volatility, I don't have that in the chart, but I'm going to bring it up right now. There's UNG. It was going to happen, folks. It was going to happen. This thing was just been a fireball when you saw resistance broken at 19, resistance broken below 21. And then you had this big gap up And we didn't close near the high. We closed closer to the low. And of course, look what you see today. So yesterday's 28 high is today's 24.28 current. That's off. If off the high, not off the close of yesterday, but off the high, we got to be almost 20, we got to be probably 18% off that high yesterday. That's a big, big drop in one day. But we also have seen some big, big moves that have happened in the last couple weeks. So where are we in terms of close to close? Well, if your close was just below 27 and you're now sitting in the 24 range, let's call it somewhere in double digits in terms of a move off that top. I suspect you're going to see UNG come down here and resistance is going to become support, especially when you see a red candle like this and we're sitting at the bottom near the bottom wick. That this might be the start of something which we like to call mean reversion. All right, let me get back to the list, and I'm going to have to do a quick little update, and I'm going to ratchet through these real quick because we've talked about all these get into USO. I got one more for you, GLD. All right, so GLD, let's rewind. You guys all know that I'm long GLD, and that latest signal I had was 183.33. Well, guess what? We went through that signal to the downside now. And so my next levels on GLD is around 181. That's the next level where resistance becomes support. I like the 181 area. I think we could trade back to that area and then maybe make another round bottom, kind of like you see here, to a move higher. I like gold, and I like gold to the upside for the long term, right? Not the short term, but the long term. So that's GLD. All right. We got a couple stocks reporting tonight. So let's talk about IBM and Netflix. So IBM and Netflix both report tonight after the bell, or tonight, I like to call it later this afternoon after the bell. Here's what IBM's looking like. Now, IBM, we've seen some signals in the past, really good one now over here where the buy was down here below 116. But then we had another little move here from about 124 to 126. Look what happened a couple days ago. Darknet jumps in and says, hey, channel collision happening. So, trading through earnings, you guys all know that I have a specific way, and it's called Brutus, to trade through earnings. All right. But when you get a signal like this, and this is a 30-day signal on average, you have to look at this and say, do I want to risk trading through earnings? Now, if it's a stock that moves around a whole lot after earnings, maybe you skip it, right? But if it's a stock where you go back and you look at the last earnings session and it didn't gap one way or another, last couple of earnings seasons, maybe you might want to step in front of that and look at that as a possibility, right? So that's IBM. The other one that we mentioned was Netflix. Look at Netflix. Netflix was, prior to the last earnings report, we were above $500. This thing is trading down in the low threes right now, as it's just had a multitude of what I like to call the perfect storm. First of all, you've got the entire market getting slaughtered for the first quarter of the year, especially the tech-heavy NASDAQ, which is where this thing sits. The second piece of information is that the stay-at-home trade, which is what Netflix is part of, is, well, for the lack of any other phrases I can throw at you, falling apart. All right, the get out and play trade is in and has been in. And then to top those off even further, you've got inflation, you've got costs rising over at Netflix, you've got them being pressured, when it comes to how much they're selling the service for. And yeah, they're raising their prices, but what's going on is now people are actually having to choose between Netflix and paying a utility bill, between Netflix and, in some cases, their food budget that they have for the week. So all of a sudden, because of inflation and because of the now 8.5% last week, that's now a 40-year surge in inflation. We haven't seen inflation this high in 40 years. I was a mere 16-year-old at that time. And, when you look at this and you look at the average American, they're saying to themselves, okay, where am I going to start to cut? And the last place they're cutting is the grocery store. And the last place they're cutting is that utility bill, the needs, all right? They're cutting the wants. And the wants are cable, going to get cut. And then we're going to start cutting some of the streaming services and maybe cut back to free, where I just have to deal with advertisement. And so that's where you're starting to see maybe the lower price Netflix is starting to look good for people. That's all causing the problem that you see here with Netflix. So I did get a buy. I did get a buy signal on Netflix, but the last couple of buy and sell signals have been not that much return. So this is one where I talk about waiting or going through earnings report before you decide to trade anything one way or the other, whether it's a bullish move or a bearish move, right? So that's Netflix. But could we trade it both ways? And the answer for those of you who are not Surge Strike members is yes. We traded this one, I want to say, a little over a week ago. We're up about 30, I think it was 34% before I came on live with everybody. And we've already put out exits on this. And so check your inbox if you haven't already, because it's time to take that Netflix straddle and bank those profits. Okay? So that's Netflix. Now, I'm going to dive into some of these individual earnings reports in a minute. I'm going to talk about some upcoming stuff and what I like to call trigger events. All right, trigger events are the time in which you start to hear and start to see traders getting in on the action. If they're excited about a stock, they might buy calls. If they think the stock's going to drop, they might buy puts. What we do is we jump in ahead of all that action because we want to serve that up to them and make a little money in the process. And so you'll see that we're going to be looking at key trigger events that my team and I are still watching. Mike Wade's going to be with me as well. Actually, he's going to be in the main room here in a little more than an hour. And he is part of my brilliant team that helps me stay ahead of the market. And when I talk about things like, like our programmers, my team who's used to be former NASA and Raytheon engineers, that is absolutely spot on. I'm dead serious about that. These guys, they build and test code. So what we do is when we spot a pattern, when my trading team and I spot a pattern, then we look and we say, is this really a pattern or is this a one-off? Then we go from, well, if it's a one-off, we discount it. If it's a pattern, then what we do is we pass that to our programming team and say, can you verify that this is a pattern? And can you give me some more information on this? Tweak it. What's the best way we can look at trading this, right? Then that's programmed in and our AI goes to work and starts to reveal what we like to call optimized patterns, okay? So speaking of my team and some of these optimized patterns, Eric, let's go ahead and show those leaked images. I think people are going to be a little bit, I think first they're getting excited. What's these leaked images we're talking about? And then they're going to realize, oh, it's just my trading room. It's just, so a couple pictures of my latest trading room are out. So I want to show them to you guys. And so you can see here, there's me with some blurry, the blurry background. All right, so that blur in the background, that's some of the computers there kind of humming along. And, screens behind me, that's kind of my natural habitat during market hours. And I want you to check this out. So here's a look, another shot with my research team at work behind me. So you can kind of see them that back there in the back, kind of moving along. Does anybody see anything that you want to point out right away? All right, because there's a common denominator in both of these rooms. All right, obviously, Tom's got a microphone on. He's talking about something. All right, that's easy. But has anybody realized there's no windows? There's no windows in the trading room. Have you realized that? Have you realized that there's no windows in the place with me? There's no natural light coming on. All right, everything we have in there is UV lighting, okay? And not the kind of UV lighting that's going to spark tomorrow, which is 420. I'm talking about UV lighting and also computer image lighting. So anyway, that's kind of what we have going on in there. Thought I would just share a couple of those with you. Why am I showing you these images? Well, I want to get ahead of the rumors here. I got a huge reveal for those of you that are new today that did not catch me tomorrow. Got a huge reveal coming up this Thursday, 1 p.m. Here's the thing. I'm going to say this right away. We're not doing it live. This is not a live event. All right. So you've got to be basically, if you sign up for this, you get to be the first to see this digital premiere and get your hands on the goods. So somehow, if you happen to miss all the emails, there were a bunch of them that the publisher put out, text messages, pop-ups, whatever way they have to get the message to you. If somehow you didn't get it, there's a link above my head right now. And I believe, Eric, can you also throw the link in the chat for everybody?
I'm working on it right now, Tom.
Awesome. Again, sign up. You get on that exclusive list for the reveal. All you got to do is just hit us up with your email address. We will send you all the information about my newest trading innovation, and it'll be available for public release this Thursday at 1 p.m. But the only way you're going to see it, you can't see it before Thursday. All right, at 1 p.m. But at 1 p.m., you can be one of the first to see some fantastic new technology. Again, my secret team of researchers, those folks behind me, the ones I haven't seen sunlight in over a year, this is kind of the dream situation that they have, because not only do they get the programming knowledge, or they get the stuff that the patterns we see, but they get to see the results, and they get to see that for themselves just how cool this is. And not only that, but how much the software will come in and start to really re-engineer our rules to the best possible trading outcomes that we could have. We got a machine in there, or several of them, but they scour the markets every day, and we're talking about looking at thousands of data points on individual stocks every single day. And of course, my genius engineers have spent an entire year building this. They codenamed it the Mega Profit Machine. The back-tested results, we're about ready to release it. And here's another thing. This is not Brutus, okay? This is something completely new, completely different. This one is really a fantastic technological advance. And not only is the patterns exciting, but the way we're going to trade the options on this really isn't like anything I've done before, okay? And I'll explain that more as we get into this program, all right? So Thursday is the day. If you want to see it, you want to see what we're doing, then follow that link, get on the list, and I'll show you how we can tap into this Mega Profit Machine. This is really the first and only time that I'm going to take you into the trading room, show you the machine itself, show you the signals that we're getting. Again, Thursday, 1 p.m. Get on the list, and you'll see what I'm talking about. All right. So, Eric, I think it's time that we get into some volatility trading. What do you say?
I think it's about that time, Tom. You revealed a little bit about your secret room there. Let's move on to some top trigger trade events here. Do you want me to pull up the ones that we have pre-prepared for you to take a look at?
Well, yeah, in just a moment. So let me set the table, okay? And I want to set the table and talk a little bit about, because we do this every Tuesday, all right? We're going to continue to do this on Tuesdays, as we call this Surge Strike Tuesday. This is a strategy that's tailor-made for profit surges in volume and in volatility, typically around earnings, but not always, all right? Most of the time around earnings. And what we're doing is we're basically capitalizing off the Reddit crowd, okay? Off the Wall Street Bets crowd, off the Robinhood group. I don't want to say it and insult anybody. I'm not insulting anybody in this room. I'm not insulting anybody in my YouTube room. But basically what we're doing is we are taking advantage of what I like to call dumb money. Now, does dumb money win or lose all the time? No. If dumb money lost every time, well, first of all, they might be out of money quicker. And second of all, it wouldn't hit the greed factor in here to make them want to come back. You have to get a hit every once in a while. It's kind of like at the casino. When you go to the casino, you walk in a casino, you see all kinds of people playing. You hear all the bells and whistles. You hear somebody screaming over on one side because they just won a lot of money. That gets everybody else in the casino excited because if they can do it, then I can too. And they actually start visualizing that they're going to pull the slot machine and get the dollar sign, right? The problem is that if everybody could do that, the casino would be out of business. So I want you to think about Operation Surge Strike as the casino. Yes, every once in a while, the dumb money crowd's going to win. They have to win every once in a while, okay? But most of the time, we want to be on the other side of dumb money. We want to take the other side of dumb money. People, there's a lot of traders out there that cannot fathom a way. They understand, for instance, what a straddle does. A straddle is designed to make money regardless of market direction. A lot of smart people, but not experienced people, will say, well, wait a minute. If I buy a $5 straddle, that means maybe I paid $2.50 for the call and $2.50 for the put. I need the stock to go at least $5 in one direction by expiration to break even, because one side's going to be worthless. The other side better be worth at least $5 because I paid $5 for both sides. And while that is true by expiration, we are out of the trade long before expiration. In fact, what we're doing is we're buying that $5 straddle. And as we get closer and closer to that trigger event, all right, that event that happens, earnings, we're seeing that $5 become $6, become $6.50, become $7. And yet the stock hasn't really moved that much. Or maybe it has moved a little bit, and both sides are like, okay, it's going down. Pump more money into the puts. No, it's going to reverse. Pump more money into the calls. And what happens is you're seeing more and more traders getting the greed and fear. Really, the greed comes in before the earnings event, before the trigger event, and the fear happens right after that event. What we want to do is we want to capitalize on the greed, and we want to be out before the fear starts to happen. That's what Brutus does. It identifies these trigger events, and we call the magnitude. That's the greed magnitude. And of course, the day we have to get out. So we talked about a list of 22 stocks that we were watching heading in earnings season. If you missed the whole list, you can get into the Tom Gentile replays, and you can watch what we did on last Tuesday's show. All right. Now, for today's show, what we're going to do is we're going to look at some of them, but not all of them, because some of them now in the rearview mirror. So, Eric, why don't you just go really quickly through that list that we put out last week of those symbols?
Of course I will, Tom. So here are those symbols for you. You have Halliburton from 419, LVS from 420. We have Ford from 427, Hood from 428, BX also from 428, GPN from 53, Uber from 54, ALB also from 54, AOS from 55, and AFRM, Tom, we have from 59.
Okay. And so I want to skip over a few of them.
Okay.
I want to skip over the first three. Halliburton, well, really the first two, Halliburton and LVS, for the actual ones we want to take a look at, because those are events that are now in the past. But when I mention that for a second, we just took off our Halliburton trade. Okay, it says Halliburton 419. Halliburton releases its earnings after the close today. So if I truly want to get out when greed is hitting that fever pitch high, it has to get out today. That's why we put out an exit report on Halliburton. And Eric, why don't you show them what it is we put out.
Sure. Pre-earnings Halliburton profits. It's a great feeling to be able to collect a profit right after a long holiday weekend, and that's exactly what we're doing today with our Halliburton straddle. And this is how it's going to work here. Halliburton announces earnings tomorrow before the market open. Our straddle is currently in profit, and it's time to collect. Here's how we do it. Your action to take is sell to close the Halliburton April 22nd, 2022 $37 call, and sell to close the Halliburton April 22nd, 2022 $37 put for a limit price of $4.50, all brought to you by Operation Surge Strike.
Yeah, and guys, we're just talking about Surge Strike trades today. So, but I have a few more I want to talk about as well. So if you collected gains on that Hal straddle that we did, great trading, congratulate yourself. That's exactly what we look for each and every time. Are we going to get profits each and every time? No, not going to happen. There are going to be forces outside of what we look at, forces outside of what Brutus serves up for us, forces outside of the options we trade around, that every once in a while, we are not going to take our profits. But again, it's not about the one trade. It's not about even a week or a month. This is about a long-term strategy. We know we're going to take losses. It's a guarantee. It's a guarantee that if you want to be in this business longer than a couple of days or a couple of weeks, you got to learn to take losses, and you got to realize that's part of the business. You dust yourself off. You continue moving on, right? And that's why we have Halliburtons, and we have the Netflix straddles, and we have the other things that we do with Surge Strike, as well as any of our research services. Okay, it's about looking at consistency over the long term. Now, let's talk about this list that we have here going on. And what I want to do is I'm going to change direction here a little bit. So what we're looking at right now is we're looking at the stocks. And going forward, I pulled off the dark net and I wanted to put on the thin red line. The thin red line is our options volatility. As you can see, it climbs up into earnings and it drops right after earnings. And what's happened with Ford is, Ford had a lot more volatility going on with it when it was above 20 bucks. Since then, it's come on down. It actually kind of bottomed down here around 15 last week, moving a little bit higher. But look what else is moving higher. You got volatility moving higher as well. This is coming into an earnings report in the next 8 days. All right. Let's take a look at Robinhood. Robinhood, this has been anyone who is a long-term investor in Robinhood and bought that IPO, which, by the way, you were doing well for a while. Got to be just kicking yourself now because it just isn't coming back. Do I think Robinhood's going to come back in the long term? Yeah, I actually believe it will. I believe they're going to have to change some of their marketing, some of their strategy a little bit, but I do believe this will be a turnaround. It just might take a few years, but right now we're sitting pretty down here at the $11.25 level, and we've got earnings coming out in 9 days. This one should start creeping up. If you notice what happened last time, look at that thin red line. All right, look what happened about 2 weeks into earnings, where we went from an 80 for the volatility all the way up to 160. The volatility doubled. That means the time premium on options roughly doubled during that time frame, and the stock didn't have to go anywhere. What's going to happen now? Doesn't look like it's going anywhere anytime soon. We're trading above a 90. My question is, can we get at least half of that? Instead of a double, can we get 50%? Right? From 90, what's 50% of 90? 45. That's going to kick us up somewhere down around the 135 area. Yeah, we could get up to that area, possibly. Okay, but that's what we're looking for. Here's Blackstone, already on the move, and this one's already left the station, by the way. Got earnings coming out in 2 days on Blackstone Group. All right, Global Payments, 13 days. Look at this turn. You see that turn, and then all of a sudden, this thing's now starting to climb. Volatility's starting to climb as well, 13 days away from their earnings, which are estimated on May 2nd. Uber, 15 days. You got that one that's going to be coming out with earnings on May the 4th. It's actually starting slowly to make the climb, but we see that climb happening in that last week to 10 days when it really starts to shoot up. So give it another week, and I think Uber is going to be a hot one to be taking a look at. These are, again, all on the Brutus watch list. Brutus is on the watch, but he hasn't attacked. And I'm going to show you a couple other ones that popped up on the Brutus watch list not too long ago either. Here in just a moment, we can add to this. So you've got Abel Abelmar, and that's Abelmar is actually starting to get a little bit of kick up as well. We see that starting to consolidate. That's a 15-day move, meaning earnings are going to happen in 15 days. So I still think we could see this big jump up here in that last 7 to 10 days. Again, we'll take a look at it again next week. A.O. Smith. A.O. Smith's been dropping $86 before last earnings. That was their high, all the way down into the low 60s before getting a little bit of a rebound here. But we're actually starting to see that march up in terms of volatility. Earnings will be out at the end of the month, 4/28 to be exact. That's about 9 days from today. And then finally, we've got Affirm Holdings, which is AFRM. AFRM was also $140 back at the holiday season, all the way down to mid-March, down to below 30. 140 down to 30. This almost sounds like a going out of business sale. We're still at 36. We've gotten caught in a rut here between really the high 20s and the high 40s. We're back down around the 36 area. I expect this one is going to get a huge surge in volume and in volatility as a lot of traders are trying to figure out, where does Affirm Holdings go from here? It has lost so much value just in the last few months. So that's Affirm. So how about what we do now, Eric, is let me add to the list. Let me show everybody. I'm going to add a few more charts and a few more symbols. So how about we go inside Brutus?
Let's do it.
Can we do that?
Of course we can.
Let's go inside Brutus. I've already kind of pre-Julia Childs did the search on Brutus, and this was just kind of coming up. And I got 3 stocks that Brutus has added to the watch list. I want to show each of those real quick. So the first one is CVX. And so let's pop on over to CVX. And I'm actually going to put it right here in the chart. CVX. This is Chevron. Basically, this is the right sector to be in terms of what's been moving higher this year. Definitely Chevron. Now, what's going on with Chevron? Last time Chevron had a move prior to earnings, we saw volatility a couple weeks earlier go from the 20s to the 30s, 36. Individual option volumes increased by triple digits. I'll share that with you in a minute. This big move that happened here, this is all Russia. And then the drop back down, even though we saw the price continue to move higher. All right, we're flirting with new highs for the year. But look what's going on with volatility. 10 days before earnings, and vol is starting to lay the groundwork for support, which means I expect to start seeing option prices on not only Chevron, but ExxonMobil too, start to move higher as both of these are reporting earnings in the next 2 weeks. All right, so that's Chevron. Next, let's look at PLD. And I'm going to pop that up in the stock chart. We're just going to overwrite Exxon with PLD. And you'll see that Prologis PLD, this has earnings that's really kind of already coming out right now. So when you look at a Prologis, and you can see here, up to 170, down to 140, back up to, guess where, almost 170. Earnings are coming out in 90 days. Where is the volatility? Where's it going? Let's jump to the 30 to 60-day IV, kind of get an idea of what's going on. Yeah, it's on the drop, right? Can you trade volatility after the earnings announcement? Yes, you can. Yes, we do. I'll show you how we do that tomorrow. The post-volatility drop, how you trade the drop. Okay, we're going to get into that for a bit tomorrow. So that's PLD. What else is on the Brutus chart? And as you look along here, I've got, wow, is that Meta Holdings I see down there at the bottom? Facebook, symbol FB. All right, let me show you how we read this, guys, because I haven't done this yet. But as you can see here, we chart the last 4 trigger events, as you can see here on the screen. And these are all 3-to-1s. Exxon is a 4-0. So Exxon has, for the last 4 earnings cycles, actually followed the pattern to the letter. And we see that. We also see these buy dates. We get calendar earnings. We start these at 7, and then Bruce will optimize these and push them higher or lower, depending on where the best time to get in is for each stock. Got our exit date. That's the trigger event. When the trigger event happens, it's either before market open or after market close. I've got my winning percent out here to the right. I got something called IV change. The IV change, this is the at the money implied volatility. This is the at the money options. What do the options change in implied volatility between initiation point and termination point? You can see here, I'm looking for positive numbers, 85.16. That means that Chevron, we see an 85% move up in options implied volatility. 59% for PLD, 81% for Facebook. Meta. Average theta over Vega change. We look for these to be small, not something crazy on average, and nearly every one of them on the list fit the bill, right? Exxon was a little high, which is why I don't have it highlighted right now. And that's partially because it had a negative IV change. Even though we were coming up upon an initiation point to a termination point, we still saw its time value actually decaying in ExxonMobil, which is why we didn't look at that one. But look at that delta effect. That delta effect means the stock likes to move during this time frame. When you see a 205, likes to move. When you see a 101, likes to move. 111 likes to move. Over here in the far left-hand side, this is where the money is. We like to call this the average return on investment ROI percentage. Look at that ROI percentage for Chevron. This is the last 4 earnings cycle, averaged 171% return. Okay. PLD averaged 98% return. Meta, Facebook, averaged 98% return. So when I go back and I look at Facebook for our last one, take a look at this. FB, here we go. And you can see here with FB, look at that climb in volatility. A lot of that has to do with the fact that Facebook was a $350 stock not too long ago, dropped all the way down to 190, getting a little bit of a move, grabbing some support. It's got really good baseline support down here at 200. I am really curious at what kind of numbers Meta is going to be throwing up on the board here in 8 days from now. I'm probably not the only one, because you see where the volatility was, kind of topping out prior to the earnings. That was coming right into earnings. Look where we are right now. We're still 8 days away. I believe we're going to see that volatility increase. I think we're going over 50 on the vol for Meta platforms. 50. We could go much, much higher. It's going to be very interesting to see where we are this time next week with Meta. And of course, a lot of people were very interested in seeing what kind of numbers are going to come out. I don't think they're going to be that much different than what we saw last quarter. I think what they're doing is going to take longer than a quarter or two in order to really shift their focus and their earnings. So those are a couple of the other names that I wanted to discuss here with everybody and add to that list. So adding on to our 22 stocks we talked about last week, a lot of them are coming off the board, but the big two that I really wanted to look at was Chevron and Meta, because Brutus is looking at them. All right. So what do you say for a few minutes, Eric? Give me some Q&A, some charts. Let's see what you guys want to look at here on the screen as we got about 10 minutes before I say sayonara.
You got it. I've been looking through the chat the whole time, pulled out a few good ones. This is one actually comparing what you guys do to Kenny and the VWAP. So we have the question coming in. Hey, Tom, my question for you is, if the V3 and Alpha 9 is the same system as VWAP, or is it the same system as VWAP with Kenny Glick? So can you kind of maybe differentiate a little bit between the two?
Nope.
I didn't think so.
Well, first of all, let's talk about the difference between the Operation Surge Strike, correct? Is that what we're talking about?
I believe so. V3, yep.
Operation Surge Strike and what Kenny does, completely different. All right, day trading And what we're looking at is trading inside of a 1 to 2 weeks here with Operation Surge Strike. All right, two completely different areas. With day trading, you need a $25,000 account. You need a $25,000 account. If you're going to take more than 3 trades, opening and closing the same option trade in a week or less, $25,000 you need. Okay, so that's one. With Surge Strike, you've got longer time frames. So yeah, we're doing on average 2 to 3 trades a week. But here's the thing, we're not getting in and out of them in the same day, so you're not going to be classified a pattern day trader. Now let's talk about, for a moment, the technicals between the two. VWAP, okay? Great indicator. I think it's a great short-term indicator. What we use in Operation Surge Strike, and VWAP is what? That's a volume price average, weighted volume price average. So what am I looking at? I'm looking at pure implied volatility and patterns that have happened over past trigger events. Two completely different sets of technical analysis, okay? I stand by the stuff that I trade, and I'm sure Kenny and 8Baller and the gang stand by theirs, because we're two completely different traders. We have two different mindsets, and both of our mindsets work well. So that's the main differences, is that you're seeing time frame and also completely different set of technical analysis, where Kenny is using technical analysis that's based off the stock price chart. I'm using technical analysis that's not only based off stock price, but based off of options implied volatility.
Nice. I think you explained that well. Yeah, good work. I have another question coming in from Leo. What's the average risk per trade in Surge Strike calls? I'm not sure how easy it is for you to figure that out per trade, but how can we hit that one?
I don't really know, but I mean, if you're just buying calls or puts, I think we're somewhere on average below $500 on the cost. The risk is going to be something different, because we don't let the trade go to expiration. So the chances of losing 100% of your cost is very, very slim. Okay, very slim. In fact, I don't think I've ever been in a situation where I'm holding call options and they're still a week to expiration and they're worth nothing. The only way that would happen is if you're trading something and nobody else is, and there's just nobody out there that wants to buy what you want to sell. That's called illiquidity. Or you're so far deep out of the money that something could just simply not have a bid.
All right, nice. Do we have time for one more before you get into your top triggers?
Yeah, sure.
Cool. Well, then let's grab this one from Badger. Can you look at KO coming into earnings?
Let's look at KO. Fantastic. Nice. And then I also got one on the YouTube channel I want to look at too, from Bruce. So KO kind of looking like this. Let's put it on the stock chart. Coca-Cola really has become more of a defensive stock than anything else, and you can definitely see why. This stock has languished in the 50s for Lord knows how long. And you know what? Let me just take this thing back. Let's look at a couple different charts. Here's a 500-day chart on Coke. Right? So when I say kind of languishing, here we are just below 50. Here we are just above 50, below 50, above 50, at just above 50, above 50. I mean, this was back in 2020. And here we are in 2021, heading into 2022. Heading into 2022, all of a sudden, Coke got its fizz back. And no pun intended, but we finally got out of the low 50s, and we traded all the way up we're trading up in the high 60s. This is something Coke has not seen for several years. Now, let's take this down to a 100-day chart. Let's take a look at what's going on with Coke. Last time Coke saw earnings, and this is notorious for Coca-Cola, and this is also notorious for why Brutus has never had Coke on the radar. Okay, Brutus doesn't drink Coke, right? Brutus doesn't drink 7-Up either, and that's the skinny can. But you know, Brutus. The reason why Brutus doesn't drink the Coke and doesn't drink the Kool-Aid is because if you look right here, look, this is a good indication of what happens around earnings. Earnings go up for Coca-Cola, and the volatility just kind of sits still. The volatility traded between 18 and 20, so it stayed in a 10% range through earnings. The only reason volatility went up with Coke is because We saw Coca-Cola pull out of Russia like everybody else back in March, and that caused a short-term knee-jerk reaction that took it from $63 a share back down to 58, came right back. Volatility came right back down, and volatility's trading in that area, that sweet spot. It might go up a little before its earnings, which are scheduled on the 25th, but not a lot of people are looking for any huge reaction to Coca-Cola. And the biggest reason why is that Coke shares is so transparent about its costs and its revenue that analysts that follow Coke really get it close to being right every single time. All right. Now let's go to Bruce out there in YouTube world. And Bruce wanted to look at DBA. So I'm curious to look at DBA. I haven't looked at DBA in a long time. I own some agriculture south of the border, and I mean way south of the border. In fact, Central America have a couple of some interests out there in agriculture, organic farming. And so when I look at that, DBA, very hard to trade the options on DBA because they're not liquid. You can kind of see here when you look at the options, when you go from a 16 to a 44 back to a 16, that was a bad option tick. Moves along, and then you saw the same thing kind of happen here. One day it's trading at 18, next day the implied volatility is back at 40, and then back down again. Again, it's because some of this, in this particular area, this may have been due to Russia. But when you see a bad tick like that, it throws off the whole chart. Now, the actual price chart of DBA really tells it all. Food prices are going up, all right? The cost of commodities going up, especially even in the agriculture world, has gone up significantly. And if you take a look here, you might stand an argument about the fact that it's only gone from 20 to 23, Tom. I mean, what are you crying about? Well, if you take a look at where we are this year, we were trading at 20. And in the first quarter of the year, we're just outside of the first quarter, we've gone up 20%. 20%. All right. That's the agriculture index. That means the cost of food, at least in the agriculture section of food, most of that's, if you walk into any grocery store, you go around the perimeter, you're hitting agriculture. Agriculture hits you right in the face when you walk into a Publix because their produce is usually right there. If not there, it's down around the corner. I know that. You look at the cost of food, and it is pretty much in line with DBA. All right. So we're almost out of time. So let me just run through this real quick, guys. Top trigger stocks. Hey, those of you Surge Strike members, come and join me and Mike Wade at straight up 1 o'clock. We're going to get into those. We're going to look at specific trades. We got a couple trades we got out of in the last few days. And according to my email, we have another one that just popped in. And I'm looking right now. Let me just double check it. Yeah. So we got a big trade in Surge. I'll leave it at that. Come on back and we can talk about that as well as our open positions, closed positions, etc. And so last thing I want to mention is, again, Thursday, 1 p.m. Check out the links above my head. Eric, if you could just throw a link in there one more time for those that came in late, we will definitely get you on the list to be at my special event Thursday at 1 p.m. For those of you premium subscribers, let's grab a quick break. I'm going to. I'll be back with Eric in our members-only room at 1 o'clock. Everybody else, I'm back here again tomorrow at Wednesday, 11:30 for our 420 special. That doesn't mean I'm going to be arriving late and slumped over my chair like this with a fatty in one arm or in one hand. Excuse me, one arm. It's not going to be that fat. Anyway, guys, thanks for joining me. We'll see you again, same time, same channel tomorrow. Peace out. I'll see you guys at 1 o'clock. Bye now.